Southeast Radio's Business Matters with Karl Fitzpatrick.
Well, PwC has recently completed its Budget 2025 submission. So in the midst of increasing business costs, the growing presence of environmental issues on the corporate agenda and the ever-present housing crisis, what does PwC want to see in the budget? Paraic Burke, Head of Tax with PwC Ireland, joins us now to tell us more. Paraic, before we discuss the PwC pre-budget submission, what are your clients saying about the current business climate?
Karl, they're saying this is a good time for business and for opportunities in the economy generally, but they're concerned about a couple of things probably in that firstly the cost of doing business, right? It's getting quite expensive out there to do business, especially in the private and SME area. Secondly, there's a complexity from a tax perspective and in other areas around just doing business. There's a lot of forms to fill out and everything's really, really important. So there are probably two things they're saying to us. On the other side, plenty of opportunities there. AI is causing opportunities for people. It's also causing some concerns. But overall, I think a reasonably optimistic position that people are in.
And to offset those increased costs for businesses, what supports are they looking for from government?
Well, they can, in a number of different areas, Karl. Firstly, we could, from a purely tax perspective, they could look at simplifying some of the legislation. So, for example, there is enhanced employer reporting, and for expenses is overly burdensome. You have to actually respond once a month. So we're just kind of looking at saying, actually, hold on, can you do this maybe once a year rather than once a month, right? Which would save costs. Then I suppose they're looking for enhanced kind of incentives, and if you look even our incentive arrangements for Irish business, Irish domestic businesses, we do very well at the lower end of companies. But once we start to get bigger, the relief probably taper off, and I think there's something that can be done in relation to that to help this out. And finally, actually, an area that they could look at is making it more attractive to incentivise employees in the business. So actually to keep employees there, to maybe look at actually the reliefs that are there. Yeah, the employment incentive, investment incentive scheme, and also to other reliefs that are available for employees to make them easier and more efficient from a tax perspective.
Some companies are transferring business into a holding company with a view to the directors and shareholders holding maybe a small percentage shareholding in their own personal name to be able to benefit from entrepreneurial relief in the event of a sale. Is that something that you're seeing in PwC?
The entrepreneur relief is available if you own 5% of the business for a period of time. There's also relief for companies available, whereby you can get substantial shareholder relief for those employees as well. And you need, in that instance, you need the whole 5% of the business for a year. So there is attraction to having a business held by a holding company, because it allows you to dispose of the business tax-free and effectively roll it into the next investment you're doing. So actually gives you more money to invest in your next business before ultimately taking out the relief, whereby you can get actually more money to invest the next time around. At the same time, entrepreneur relief is very helpful and very useful, and there can be benefits to retaining a percentage to ensure you can actually take some of the money off the table at 10% when external transaction happens.
For anyone listening to this morning's show that's considering selling their business over the coming years, what advice have you got for them?
So there's a couple of things that I would say there, Karl. Firstly, I think it's important to plan in relation to any disposal, and plan can be the structure in which the company or assets are being sold. So you need to look at what might be sold, how that's held, and possibly how that the investment itself is structured. That's one area I think that's worth looking at. The second area is, I think if it's a family company and if your children are involved, have an interest in but may not have a shareholding in, I think succession planning and business property relief is an area that should be looked at, to maybe look at transferring some of the wealth down to the children prior to any transaction they may have an interest in it. So it's worth looking at. And the third area I would always say is you actually, as well as structuring, you also need to actually plan disposals in terms of any issues that may be in the company purely in this case from a tax perspective, because if any purchaser comes in, they are going to do a due diligence exercise, and to the extent there are issues there, they are going to take them into account in determining the price they will win to pay. So I always think it's better to have a review of all different areas, from that to payroll taxes to corporate tax, to see if there are any issues there. And if they are, get them dealt with, get them regularised. And I think you'll find that actually that will do the business good in terms of actually a price you'll get, because you'll have dealt with the issues yourself, not under pressure of an acquisition.
And what are the other key recommendations and calls on government by PwC in advance of Budget 2025?
We've probably broken down our submission into 5 different areas that we would like the government to touch on. We've spent a fair bit of time talking about private business and, how people are impacted by it. I think incentives to assistance during investment, attracting and retaining talent in private business are absolutely key. That'd be one area. Secondly, I think a broad range of tax policy initiatives to meet Ireland's housing challenges would be very important. I might touch on that in a minute if you don't mind. Simplification of tax legislation. I touched on it already. The tax legislation is extremely complex. Now, the corporate tax return you submit now has gone from 20 years ago, less than 10 pages, to now over 64 pages. And actually, if you get something wrong in that, you forget it, fail to tick a box, it can have significant implications for you. So that puts a massive burden on companies. So I think actually simplifying the tax legislation, decluttering it, taking out onerous conditions that aren't adding anything to it would be important. Again, steps, we need to do stuff to increase the attractiveness of our FDI and FS offering. And finally, tax policy and incentives around the whole climate change, decarbonisation and renewable energy is a really, really important area.
Of course, housing remains a problem in Ireland, and the lack of housing is not just a social issue, it also has ramifications for businesses. So what is PwC proposing in this regard, Paraic?
Well, there's a couple of different things in relation to housing. We believe that the retrofitting scheme should be extended, modernise existing houses and help new supply. Getting private landlords back into the market is really, really important, because they've been scared of a rent cap, a 10% stamp duty rate and eviction bans. And realistically, we need to try and ensure that the private landlords out there. And one idea we've outlined in the submission relates to mainly it's to employers that have properties, especially in private business, and to actually incentivise them to rent them out to their workers. At present, if somebody rented out a spare house they had to their workers, they would, and it's probably held by a company or even individually, they would be, from a company perspective, taxed at 25% of the income. It would be treated as surchargeable income, and an extra 20% tax could be payable. So that's a 45% tax. Well, we're suggesting that if an employer has owned a house, it would the rent that they get from that would be taxed at 12.5%, not subject to closed company surcharge. So it actually makes it more attractive, incentivising people to do it. On the other side, what they could do is, if they rent it out to an employee at no cost, then they're subject to BIK on that rent-free amount. What we're suggesting is an alternative could be actually up to a certain limit, because make sure it's not abused. You would actually, the employee would not be subject to a BIK on that rent-free period.
And Paraic, there are reports that sick leave increments and moves to bring the minimum wage on parity with the living wage may be paused. What's the likelihood of that happening in Budget 25, and is it sufficient?
There's obviously been some reports about this in the last couple of weeks. It's a very interesting area, and it certainly plays to the conversation and we had earlier around the cost of doing business. There may be pauses on things, but I wouldn't expect a radical shift in relation to things over the next while. But I think a pausing of some of that move up might make sense in the current environment, and certainly from a business perspective would be very welcome. As against that, when you're going into an election year, I suppose, do businesses actually vote, or is it individuals? It's individuals, and if they're the ones suffering from lower wages, etc., there may be a temptation to actually putting them increases in there because it might help on the voting side of things in the election. So it's really a hard one to call.
And of course, foreign direct investment and the financial services sector are areas that PwC would like to see supported in the budget. So how can Ireland maintain its attractiveness from an FDI perspective?
Yeah, it's a very good question. We've got certainty around the corporate tax rate. So we obviously have a 12.5% rate. And for our businesses that are within Pillar 2 turnover of worldwide turnover greater than $750 million, then the rate minimum rate is really 15%. But I think all parties are given certainty that this rate will continue. So I think that's very, very helpful. I think, as well as the rate and the certainty, the actual simplification of the rules is really, really important. So Pillar 2 has brought in another set of tax rules that need to be followed. And these tax rules are not the same as the Irish corporate tax system. So in effect, companies now, Corporate will have two sets of rules to follow. So certainty about this and simplicity will make a big difference.
Green initiatives are becoming more and more critical. So do you expect that decarbonisation and renewable energy to be a focal point of Budget 2025?
Well, we certainly would like to see it as a really, really important part. And this is, I think, is where, from an Ireland Inc. perspective, we can do a lot of good stuff, because in the funds industry, we can try and attract in the funds industry into this area, and there's a lot of good opportunities there. In the FDI space, it's about getting companies in and actually investing in renewable energy. And then from a private business perspective, if you try and develop the financial services market in this area, if you try and develop the FDI area, then actually Enterprise Ireland and other similar bodies trying to reward and encourage local business to go into those areas is really, really key as well. We've obviously, from last year, a couple of new funds have been announced. The first of those funds, money can be drawn down there from that fund within the next 2 years, and that gives a great opportunity to actually fund some of this investment. When you look back at last year's Finance Act and the budget, while they announced these two funds, in terms of the actual relief that they spoke about, the actual new relief, there wasn't a significant amount. A very simple measure they could do is that we've got 100% enhanced capital allowances for certain green type assets you buy. But even the way you qualify for the relief is very, very complicated. You have to buy a specific type of light bulb, a specific type of machine. It doesn't look at the whole position in the round. You could get 100% capital allowance in certain energy efficient assets. There's no obligation for that building in which you build it, for example, to have windows. That's a bit mad, to be honest with you. So I think you could take a total relook at the relief that are there, make it simpler to claim, but make it broader so that actually it's consistent with the overall approach you're making in relation to a particular investment.
The PwC pre-budget submission is available on your own website to download. What would you like business owners and managers to do with that after they have digested it?
Thanks, Karl. I think that's a very good question. I think clearly if anyone has any issues or any comments in relation to it, we're more than happy to talk to them. But I think what we've tried to do in this pre-budget submission is outline a number of measures, that can be implemented in what we believe to be key areas. Certainly we'll be discussing this pre-budget submission with the government parties, with, the main opposition parties. But I think there's a great opportunity for business owners who meet their own local politicians, TDs, and representative bodies to bring these issues up with them when they meet them. Because I think the more people are aware what issues are there, and the more people in government are aware of them, I think the better chance that they can make some changes.
Well, if you've just tuned in, that was Paraic Burke, Head of Tax with PwC Ireland, and there will be plenty of speculation over the coming months about what may or what may not be included in the upcoming budget.
Southeast Radio's Business Matters with Karl Fitzpatrick.